Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and we're back today with the Midday Market Minute. We have Fed Day. We're coming ahead, and the dollar is weaker. You got gold pushing higher. We love gold. It's coming off a major three-star support. You have crude oil out above $65, seeing support from the weaker dollar, but also a bullish inventory report. You have also tension in between Saudi Arabia and Iran. We could see the rescinding of that Iran nuclear deal as well. All of it is helping crude push out above $65, and if the dollar weakens today, it could set crude on a path to break out above 67, and that would send it to 70. We are very bullish on commodities. We think the dollar is going to continue to weaken. We think gold is going to continue to find big support down there below 1310, and it's already used that to propel itself higher. If it gets out above 1340, you could really start to run. The equity market, the S&P is pushing out above our resistance at 2729. There's a trend line from the recent highs that align with that level today. It's all pushing out above there. So what's going to help all this move? It's going to be a Fed that is less hawkish than priced into the market. And by that, we mean going back to the end of February when Powell gave his congressional testimony and the comments that followed that from New York Fed President Bill Dudley. He redefined gradual, the fact that we could get 4 hikes this year and that be gradual. Now, we do not think we're going to see 4 hikes on the dot plot today, and what that will do is send the dollar lower. Look back to December. We had 2 dissenters. We saw 2 dissenters in that December hike, and neither of those guys are really looking to see a hike in the first half of this year. That's going to be very supportive to commodity prices. If those guys start to hold back, it's going to drag down that median on the dot plot. So this is what we're looking for. You may get a little bit of a hawkish tone from Powell, but because of the lackluster CPI, CPI was in line this month, but it was slower than the last 2 months. Really poor wage growth. You also have poor consumer spending and retail sales. So all of this is going to pull him back from that more assertive, more hawkish tone we saw at the end of February. And I think all of this, it's about the perception is the new reality, and ultimately that perception is going to pull back, and it's going to be and come off as dovish relative to the previous expectations. Give us a call. We're here to talk about it. 312-278-0500. You can email us, info@bluelinefutures.com. You can sign up for a free trial of our research at the website. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.